I read the news so that you don't have to. Imagine getting scammed by your bank. You take them to court, you win, and then the government quietly changes the rules so that the next time they scam you, you'll probably lose. Something crazy is going on in the UK right now, and as you can see from this headline, it says the UK plans to curb powers of financial services watchdog. It never rains, it pours. So what's the setup? Let me break it down for you. Here in the UK, we have something called the Financial Ombudsman Service, also known as the FOS. They're basically supposed to act as a kind of referee between you and a financial services company. So if you've been missold a loan, has the bank messed up, have your insurance people screwed you over, you go to them and they decide what is fair and reasonable. Not just what's legal, but what is fair. That's the key. Now, the Treasury, in all their infinite wisdom, wants to change that. 3 big changes. The first is less power for the Ombudsman. Right now, the Ombudsman can say, yeah, the bank followed the rule, but it still isn't fair. That's how we got things like the scandal of the car finance mis-selling, which potentially cost a bank billions. So the government wants to stop that. Basically, they're saying if the firm followed the rules, then they're in the clear. They also want to introduce a 10-year time limit. So the current system allows you to complain within 6 years or within 3 years from when you realised something was wrong. Now they want a hard stop at 10 years. That sounds reasonable until you realise that a lot of financial harm takes years to surface. The third thing is the government want more control. The Treasury wants the power to appoint the Ombudsman chair, and critics are like, wait, so the government regulates the regulator and now controls the referee too? This isn't random, guys. As you know, this is part of a bigger agenda which seeks to deregulate in order to boost growth. Their argument is there are too many unpredictable rulings, there's too much risk for firms. Someone think of the firms! And they're saying that investors are getting scared. So they want to fix it by making outcomes more predictable for businesses. So what will be the implication? What is the trade-off? So for consumers, there's going to be less protection, it's going to be harder to win cases, and there's more reliance on technical rules over fairness. For companies, that brings them, those poor companies, more certainty and that lowers the risk of massive compensation payouts. And the big question is, do you want a system that protects investors or one that protects you? Because right now, the balance is shifting. And just remember, financial scandals don't happen by accident. They happen when the rules quietly change, and most people don't notice until it's too late. Basically, they're saying, would you rather have fairness or predictability? Because there is not an option to have both.